Chapter 34, Combining Trend Lines and Indicators. It is tough to predict the exact top or bottom of any stock movement. Nobody is perfect in financial analysis, and many long-term prices average out over time. However, you can get optimal fill prices by using trend lines and indicators. These rarely form perfect setups on their own, but they present compelling opportunities when used together to identify trends. Some indicators work better than others depending on the stock you're trading, whereas other assets rely more on trend lines. Try out different indicators and trend lines on stocks to find ones that work in a given situation. All of the indicators you learn about work well in different analysis situations. You may get better results with an indicator or perhaps find a stronger trend line when you change the time frame of a stock chart. Most indicators look radically different as you change from hourly to weekly candlesticks. As you find the asset management time commitment that suits you, you will naturally figure out which indicators and trend lines work best alongside your trading strategy. All indicators eventually return to normalcy. Here's a standard chart of Amazon.com Inc. using every indicator we've discussed, and then it's pretty cramped. Try to efficiently and systematically remove indicators from your charts to see that you see no setup in until only a few indicators remain. Especially with shorter term charts, you may base positions entirely on price action, trend lines, and VWAP alone. Still, indicators can help in any given situation. MACD, RSI, and stochastics in particular seem helpful in this trading situation. However, other indicators like Ichimoku clouds may prove less useful in your analysis. You can choose from hundreds of indicators in Yahoo Finance in your brokerage-specific trading platform. We've gone through some of the most adapted indicators that work well in a diverse range of trading situations. Try these indicators out on your stock charts to see what works well for you. If something does not work for yours in a certain situation, remove it to declutter your charts. For reference, Ichimoku clouds plot moving averages and clouds derived from moving averages to predict a stock's current trend and forecast future crossovers. You can use these slightly messy clouds to identify a current stock trend just as you compare current prices to moving averages. There are many random indicators such as this one that add complexity to most analysis. Master the indicators given in this book, figure out exactly when to use each one, and make a few trades based on any combination of them. Once you master these core indicators and trend lines, you can move on to more obscure indicators, but always remember to stick to your principles and trading style that you will establish over time. Here's an example of overanalyzing Six Flags Entertainment Corporation with 5 trend lines, a weekly 200 moving average, stochastics, and MACD. And then we see in Six Flags there are just a bunch of trend lines and moving averages and indicators. And the trend lines themselves would be useful on their own, but with so many of them, it just is tougher to look at the stock and analyze it accurately since there's so many price levels to consider. And not a whole lot of percent gain to make on a profit on this trade if you do happen to find like the most amazing one possible. At the same time, the stochastics look interesting and they helped in a lot of situations, but they aren't necessarily the most proven. There were some really good setups at some lows when the stochastics hit the 20s. And again, those are going to be further supported by that MACD below, which is going to help you get in at the best time possible. So figure out, look at the trend, look at the repetition, and try to find patterns that look like they're going to repeat themselves, and then, base your positions accordingly on your confidence in the pattern. These trend lines seem valid in the moment, but the sheer number of support and resistance levels makes 6 difficult to analyze. By simplifying your trend lines to 2 or 3 primary trends, you can streamline your order entry triggers, stop loss levels based on drops or rises in a stock's strongest trend lines. The overall number of trend lines depends on the stock in question, but try to find the strongest diagonal trend lines along historical support and resistance levels. Combine simplified trend lines with strong, reliable indicators to clear up any remaining price confusion. Alongside indicators, company fundamentals are crucial for long-term and swing trade investments. Does the underlying company make money? Here's an example with Advanced Micro Devices Inc. Then we see a long-term horizontal support at the base of their recent 2017-2018 movement, and in that downward wedge there was a pretty significant trend that emerged from the highs of that movement that correlated to the previous highs of the 2000 dot-com bubble and another run-up in 2007. So those supported that long-term downward wedge And at the same time, you can see a significant price target at that supporting or at that resistance line, which is established by the previous high made in 2001 or 2000 a little bit after the beginning of 2001. That was also a big point of consolidation for AMD in 2007, and that is where you would sell. Before the initial run-up that formed the recent wedge shown above, Advanced Micro Devices Inc. invested significant time, energy, and resources into developing a new line of consumer processing microchips that significantly outperformed their previous product generation. Advanced Micro Devices was still unprofitable and down from its historic highs, but they showed potential innovation in their industry. After the company launched these chips and retook a larger market share in the technology chip sector, the stock skyrocketed from around $5 to $15. However, this move proved to be short-lived as the stock soon crashed to a support at $10. Yet, over the next year, AMD proved very profitable and took a large market share from Intel Corporation. With this fundamental growth, the company broke out of its downward wedge and flew to historic highs. You can then time your exit from this trade or enter a short position based on the previous resistance levels in historical large run-ups. The large previous run-up also showed immense long-term volatility in AMD and further supported a long trade in the stock for the hope of a similar run-up. By using your technical analysis skills, you can find a strong resistance just under the peak of two previous run-ups in the 2000 and 2006, but at the very top of the 2001 upswing at 34.65. What? Let's fix this sentence, eh? Page 269. Look, I've got one chapter left. When I start recording? Oh, perfect. All right. Look, here's the deal. We're just going to continue where I said yet over the next year, okay? Yet, over the next year, AMD proved very profitable and took a large market share from Intel Corporation. With this fundamental growth, the company broke out of its downward wedge and flew to historical highs. You can then time your exit from this trade or enter a short position based on previous resistance levels in historical large run-ups. The large previous run-ups also show immense long-term volatility in AMD and further supports a long trade in the stock for the hope of a similar run-up. By using your technical analysis skills, you can find a strong resistance just under the peak of two previous run-ups in 2000 and 2006, plus at the very top of the 2001 upswing at 34.65. You could also find a more conservative price target for the recent movement at just over $31 based on historical consolidation at this price level in AMD's 2006 run-up and average peak at the 2001 bounce back. With both fundamental analysis and technical analysis, you can find the best opportunities to buy after the wedge breakout in this position and the best places to sell historical resistances in this position. In-depth research about corporate fundamental and overall market shifts are key to long-term investments, but matter much less for 9 to noon trading compared to immediate news catalysts. By further combining fundamental knowledge of any company with technical analysis and financial report analysis, you can ensure the strongest long-term stock picks and best order entries on macro factor influenced positions. Stay dynamic with your look-back periods and indicator usage. Put indicators on your charts and find ones that work well in different scenarios. Fluidly transition from daily to weekly to monthly candlesticks with analyzing long-term performance, especially with moving averages. With 9 to noon trading, find historical support and resistance levels and trade with shorter 1 minute, 5 minute, and 15 minute intervals. For swing trading, find a sweet middle ground with hourly and 4-hour candles. With enough indicators, trend lines, flexibility, and practice, your trading will surely improve.